Hey guys, it's the Crypto Cowboy. I'm coming this time with a little bit of a different lesson. Usually I present Bitcoin technical analysis pretty much every single week. I run you through my charts and through my analysis and what I think is happening into this market and some other markets. But I haven't done more of an educational lesson in a while. And I've been getting some questions about it, and I wanted to just kind of, run you through this process because I think it's important when we look at the wave principle in general. So let's begin. All right, so the purpose of today's presentation is pretty much about how to trade Elliott Wave patterns. And, being an older trader, maybe more, accustomed with the wave principle, or being somebody new, we all kind of have questions about, hey, what does this do for me in the end? I know we can analyze the patterns and we can try to project and predict different price limits or retracements. It's basically a tool in our arsenal, right? Elliott Wave principle and the Elliott Wave tool is pretty much a language that we're speaking and we're learning every single day, and try to get better at it and to understand the market's movements. It's pretty much what drives the markets is the social mood and emotions, and those are all represented into the waves that we can see on the chart. And I wanted to take a little bit of time and just say, hey, how do we trade these patterns? And what's the most advantageous way to take, to look at this, and how can we make money by trading Elliott Wave patterns? So I'm going to start by saying, all right, take a look on the right side of the screen here, and you can see the basic Elliott Wave structure. And that is a 5-wave move up, impulsive, and then you have a 3-wave correction. This is at the base of the wave principle. We advance in 5 waves and we correct in 3 waves. And if you know this, you're pretty much, done, right? You pretty much understand the wave principle and you know what's going to happen. And we're on our way to making lots of money, by knowing this. I wish things would be that simple, but they're not. But the wave principle, it's as simple as this, right? You have to know how to count to 5, and you have to know your ABCs. And from then on, you just have to dive in a little bit and just look at the structures and try to take advantage. So not going a lot into the details about each individual wave and each individual patterns, and I've got lessons on that as well. I mean, you can check some of the stuff that I presented before. You can go into one of my playlists and just see what you can find on there. I'll probably post some more. I have a full Elliott Wave course, of about 7 hours, so I explain in detail a lot, about every single pattern and all that. So I'm not going to bore you with that. But the basic thing is, like, how do we trade these patterns? And the number one thing that we are looking to find out when we're trading Elliott Wave is, which pattern are you looking to trade? All right. And this is I think the number one thing, because this is what creates a trade preparation. We're looking at the charts and, we're seeing a bunch of waves up and down, and we don't know exactly which one to trade or how to pick them. And I think that's, it's something that, as a new beginner into the wave principle, you're probably going to ask yourself that. So in my opinion, the best legs to trade are the ones that are the most impulsive and the ones that give you, the most juice out of the market. And that would be a wave 1, it would be a wave 3, it would be a wave 5, it would be a wave A, and it would be a wave C, right? All these waves are impulsive moves. All these waves are pretty much sharp rise into price, and, can give you pretty quickly, a return on your investment. These other ones here that are kind of counter trend, like a wave 2, a wave 4, a wave B, they're kind of dangerous because the market corrects and it goes sideways and it doesn't do much and just kind of overlaps. So I'm trying to stay away from these legs, right? So basically, just by looking at this, I can already identify that, I can eliminate from this 8 legs that are in a complete wave structure. I can already eliminate 1, 2, 3 of them, right? And I can remain with 5. And those 5 are the impulsive ones: wave 1, wave 3, wave 5, wave A, and wave C. Pretty simple so far, right? So you're looking at the chart, you're opening it up, and you just got to find out where you are. Now, are all these patterns good to trade? I would say no, because from these 5 that are left, and I'm going to delete this, from these 5 that are left, again, we're looking at 1, we're looking at 3, we're looking at 5, we're looking at A, and we're looking at C. From these 5, only a few are important. The other ones are not. And if you ask me, this wave 1, it's not a tradable wave. This wave A, it's not a tradable wave. So what are you left with? You are left with wave X, with wave 3, you are left with wave 5, and you are left with wave C. So all of a sudden, from 8 patterns, from 8 waves that you have in a complete Elliott Wave structure, you're going to be left with 3 of them. Automatically, this is going to reduce your over trading tendencies, right? We all have them. We all have them in the beginning, and even later. The markets are exciting. There's a lot of things happening. You can see movement, and you want to get in. But just by simply sticking to the structure, you're going to be a much better trader because you're going to pick your battles a little bit more carefully. All right, so let's look at that. Why don't I want to trade wave 1? I don't want to trade wave 1 because it's a wave that happens after a decline. And if I want to trade a wave 1, I'm going to have to pick the lows. And we're not in the business of picking lows. And if you are, I would say stop it. I'm not going to get into a lot of the details, and I'm going to stay on a stand here and just pretend that I know everything. But I know one thing. If you're going to pick lows and if you're going to pick highs, you're going to get in a lot of trouble in your trading career. So we're not trading wave 1s because wave 1s are the waves that are coming from the lows, and to trade it profitably, you need to be able to pick the low. Otherwise, you're not going to be able to do it. Okay? Now, depending on your time frame, and I have this here where it says stick to your time frame, you might be able to trade certain instances of a wave 1. Remember, wave 1 on its own subdivides into an impulsive move, so subdivides into 5 waves. So you can possibly trade wave 3 of wave 1, which is this lag, but you'll never trade this lag of the wave 1. All right, so after you get a little bit more experience, and again, this is just a simple structure, and these markets are fractal. They apply to every single time frame. Okay, but the idea here is you don't want to trade wave 1. You want to trade wave 3. Again, you can see how even if I go to a smaller time frame or a subdivisions, I'm not looking to trade this wave. I'm looking to trade this wave. I'm looking to trade this wave. And the reason there is because if you're going to try to pick a low, you don't have a place to put your stop. And if you don't have a place to put your stop, then you don't know where you're wrong. And this is a very important point in trading, is you got to know where you're wrong. In trading, if you don't accept that you're wrong, you're going to lose a lot of money. Or you're going to be stuck with positions for years on end, and you won't be able to get out of them because you don't want to accept that you're wrong, and then the premise that you took the trade on, it's no longer viable, or it's no longer present. On what basis you took the trade. So going back to this, you're going to see that the wave 3s, wave 5, and wave Cs are the most profitable waves. So we wanted to trade wave 3 because after a decline, we have a wave 1. We're going to wait for this to finish, and then we're going to wait for a pullback to complete, and then we're going to enter the trade. The reason that is because the moment you enter the trade at the bottom of the wave 2, the beginning of the wave 3, however that happens, you already have a place to place your stop, and you know where you're going to be wrong, because the premise for your trade is that you're going to trade at wave 3. And if you know the wave principle, and if you know the structures, and you can dive in and learn the rules and the guidelines of the wave principle, you know that wave 2 can never penetrate the origin of the wave 1. So this wave 2 can never come down here. It needs to stop above this level. So I know exactly where I'm wrong. I'm wrong below this. So I can enter here and I can place my stop below here, and then I have a very nice relaxed trade. And this comes to the point that I know where I'm wrong. And if I don't, then I don't take the trade. So you enter in there, you place your stop below, and then you look to make at least twice of what you're risking. So if you're risking this much on here, you have to make at least, a time and a half if you can. Hell, you can take 1 to 1. It's not a problem. But the idea is that you're going to try to squeeze as much as possible out of this third wave. And if you know a little bit about projections and fibs and multiples, then you know where these targets are going to be for the wave 3 and how far this wave is likely to travel, where you can take some partial profits, and where you can move your stops and all of that. All right, I'm not going to get a lot into these details because I don't have a lot of time on this video, but I've explained this in details into my course. I don't want this to sound like a sales pitch for my course. It's not, but I really can get into a lot of details about, fibs and, let's say multiple targets or take profits and stuff like that. I'm just trying to say which waves are most profitable to trade. So that's the third wave. Okay, then the next wave that's profitable to trade is the wave 5. Why? Because we already know that we have a fourth wave, and we know we're going to be wrong. Now, this fourth wave can take different forms. It can be a triangle, it can be a zigzag, it can be a flat, it can be anything it wants to be out of the corrective pattern structures. But the moment we think that it's going to be finished, we can start to trade this wave 5, because we know after a 3-wave move and a corrective move, if we're on an impulsive pattern, there's a 5th wave, there's a 5th wave that's supposed to come, and we want to trade that. Okay, now again, there is targets and there's fib multiples about how far this wave 5 can travel, but it's a very profitable wave to trade because in an impulsive structure, that 5th wave, it's part of it. So it's something that's going to come after as part of the whole impulsive structure. So we know this wave is coming, we got to be able to trade it. So we're looking at this. If this is a triangle and it's going to be, something like that in a 4th wave, right? Then, we know exactly where we're going to be wrong and where we're going to place our stops, depending if it's a triangle, if it's a zigzag. But, all the time, you're going to be able to take this and place your stops below, certain levels, depending on the structure that's on here. All right, but you're going to be able to trade this wave 5 pretty profitably. Now, you got to be careful with your stops because this 5th waves are short and they're quick, and sometimes they're extended, but you got to be more careful with this 5th waves than you are with the 3rd waves, because they can end abruptly. Then the next wave that you can trade, it's going to be wave C. And why don't we trade wave A? Again, because we don't want to pick tops. So wave 1 and wave A are coming from bottoms, or they're coming from tops, and we don't want to touch them. We want this wave A to finish, and then you want to sell a correction into the wave B and trade wave C. Okay, you never touch wave A's, you never touch wave 1s. Again, part of a wave A, you're going to have an impulsive structure. If it's going to be a zigzag, you're going to have a 5-wave pattern in here that's going to look just like that. And then you're going to have a wave 1, you're going to have a wave 2, you're going to have a 3, a 4, and a 5. So you can trade this leg off that wave A. You can trade the whole thing, right? If you think it's going to be a 5-wave, sometimes it's only a 3-wave move, and it's going to end up being a triangle or something else. But at least you're going to have one leg to be able to trade off of there, right? So basically, when I'm talking about which leg of a pattern are you looking to trade, this is what I'm referring to. Okay, and then the C leg, it's one of the sharpest leg there is, and it's a very nice leg to trade. This can turn into a 3rd wave, because this can be a 1, 2, 3, 4, and 5, and could be a different structure, but it could be just a simple ABC, and you can trade this pretty profitably. Okay. Now, what am I talking about when I say which pattern are you looking to trade? So, as you know, there are multiple patterns, right? We have triangles. Okay, we've got flats. We've got zigzags. We've got leading diagonals. We've got ending diagonals. We've got we've got triangles. I already said that, right? So there's only 5 patterns, 5 core patterns that there are in the Elliott Wave structure, right? We have We have the motive wave, we have the impulsive wave, we have the motive wave, which is the impulse and the diagonal, and then is the corrective patterns, which is the triangle, the flat, and the zigzag. All right, so those are all the patterns that are out there. So these are the ones that you can trade, but you got to identify them first. So the moment you see them on the chart, if you see a triangle, then it could break up or it could break down. And then you have to have a methodology to trade those, right? There is certain rules that you can follow about, if a triangle is in an A, B, C, D, and E, right? If this is the structure, then more than likely you're going to break up, and you have to know exactly how to trade this. But basically then you're trading the pattern, and you're trading the break out of this pattern. This triangle can also break to the downside, because this could be just the initial decline of a wave A, and then this is an A, B, C, D, and E, and you're breaking down. And then you have an A, triangle in B, down in C, and you can trade that by selling below these levels. All right, so this is how you trade patterns. Then you have a zigzag. If you notice a zigzag like this, the whole structure, and the move is complete, and this is a retracement, then you wanted to trade a break out of the zigzag into the next pattern. So this is how you trade a pattern. Okay? Same thing for a diagonal. If you notice an ending diagonal chart, it's much nicer to trade this decline, even though you're going to be looking at the confirmation for a wave A, but you notice the pattern on the chart. You're not necessarily looking for those legs, but you're looking for the patterns. Okay, and same thing with the flat. If you notice a flat, you know that every time you have a flat and you can spot it, you can see it's a 335, you know that the next move is going to be aggressively to the upside. So now you're trading this pattern. So you got to know which pattern are you looking to trade, which leg of a pattern are you looking to trade, then where are you wrong, and on what basis you took the trade. This is very important, because if you took the trade based that is going to be a third wave, and it has to be in 5 waves, and you're only getting 3 waves, then you're probably going to think twice about staying in that trade for much longer. And you're going to take your profits and go home and then look for the next trade. So you always have to know the basis that you took the trade on. If it's a triangle and it doesn't break up, or it's breaking down, or if it doesn't pan out the way you originally intended it to, then you have no business being in that trade. Because then what your mind is going to do is going to try to find justifications to keep you into the trade, and you don't want to do that. So if I'm trading this pattern, as a second wave pullback, and I'm getting in, and the market does something like this here, and it starts to move into a triangle and does something else, then you got to be out of the trade. Because following a second wave pullback, you got to get a third wave advance. And if you're not getting that, that means that something else is going on, and the market is not responding to what you thought. So the basis that you took the trade on is wrong. Now, you could be right in the end, but that's pretty much only in hindsight, so you're not going to know. And then, you start to think, you start to look at the different candlestick patterns, and you start to pull RSIs, and you start to pull, all kind of clouds and all kind of different things to help you and justify you to stay in the trade, but that's not the reason why you took that trade in the first place. So the reason that you take the trade in the first place, that's the one that you have to stick with for the rest of your trade. At least that's my 2 cents on that. Okay, and then what are some reasonable targets? This is very important. Why? Because we have to know how far the market can actually travel. So if I'm going to look to trade a C wave, and I know it's going to be a 3-wave decline because I can identify the market previously as an impulse, and I know at the minimum I'm going to get it, I don't want to look at this leg, for example, to sell off all the way here. I got to be reasonable. I got to think that this is a corrective move, and then I got to trade it as such, and I don't want it to ask too much from the market. Now, you can always leave a position on just in case something happens. But I would take most of my profits at my targets. So if I'm looking to trade a C wave, and I know that usually this C wave equals wave A in the length, then then that's my target, and I want to be 75 to 80% out of my trade by the time it reaches those levels. If I want to leave a 20% of my trade on just in case this develops into a third wave, then so be it, and then you move your stops accordingly. But don't ask too much from the market. Again, what are the bases that you took the trade on? Am I targeting a third wave? Am I targeting a fifth wave? you know, am I on a weekly chart, on a daily chart? And this takes me back to stick to your time frame. So if you're going to take a trade based on a you know, on a 5-minute chart, and this is the pattern that you're noticing on a 5-minute chart right here, all right, then don't be switching to a 2-hour chart because you're going to see something else. All right, your goal is to make money on your time frame that you are on. And if you notice this thing and you want to trade a move, you know, this is a wave 1 and this whole thing is a wave 2, then you know that it's a 1, 2, and you're targeting wave 3, and that's it. You stay in that time frame, and that's you're taking your profits, and it's totally something else. Now, if you want to move to a daily chart because you're, you know, you don't want to stay in front of your computer all day, then you have more time to wait, and then, you know, you're going to trade a leg C on a daily chart, but that's going to take maybe a couple of weeks by the time it's over. So maybe you have multiple accounts, but if you're getting on a 5-minute time frame and then you're switching to a 4-hour chart and you're still in the same trade, it's not going to look like that. It's going to be something totally different. You're going to see different patterns. You're going to screw up with your mind. All right. So this is how you trade Elliott Wave patterns. And if you want to learn more, come visit us in the room. You know, we have a professional room where we trade actually, and we you know, we don't just teach this stuff. We actually put money behind it and we trade these things, and you can see live and there how we're doing it. You can also take the course if you want. You know, it's separate from our room, so it doesn't matter. You know, or you could just continue to follow me on YouTube and you know, see our videos. I'm curious if you have any suggestions. If you like the video, leave me some thumbs up, subscribe to the channel, and I'll see you on the next one with something else more exciting. All right, bye-bye.